Well, and now here we are at the second stream for the day, the 3rd of January, 1 o'clock, 1300. You see that the FOMC minutes are out and the reaction to that. Make sure we've got everything on there. Yep. And the book has completely disappeared. All of the liquidity is gone. Important to monitor that. Just basically traded up until 1 o'clock. And here we are trading over the top of it. VPOC, mid, VPOC. And now I'm trying to see whether we're going to get lower or higher here. Funny what the book looks like when they shut off all the algorithms, isn't it? Nothing. IB low. See if we
order submitted.
See if this thing continues to drop like before. So there's our entries. Top
Order
status
submitted.
13. Got just under this liquidity here with the first limit. Should be risk neutral in a minute. Wow, that's pretty frustrating. Going to be real irritating if I get a stop here after being within a tick of risk neutral. That looks like what's going to happen here. That's just pretty darn disappointing. Got to be kidding me. Well, there's the stop within one tick of risk neutral. Very, very disappointing. The joy of trading. Wow, that's really One tick. Wow. And what would be the possible thinking for that? First of all, it was a late entry, basically FOMO. I'm guessing I was trying to just get on. Last FOMC was a huge short opportunity, but this was just a really late entry, so I will have to put that down as a FOMO. The entry should have been here, but too quick for me. That's a case of a late entry, or when this range starts to compress and puts the stop in the wrong spot. Boy, that's disappointing. And I even made sure I would get back here in time for this FOMC stuff. Well, it was actually quite, I'm actually pretty surprised by that one. Especially, I was especially looking at this, micro composite low and all this liquidity that remains here. Now the book's starting to thicken back up a little bit. Still looking like it's leaning south as far as the overall trade of the day goes. And now I suppose they're just reading the minutes or digesting the minutes or whatever it is they do with the minutes. So disappointing. The magic of trading. And back to the POC. They get a squeeze on now. That could be epic. I'm a little bit apprehensive as to what to do here now. I'd like to think about that short, but we did touch the POC, so the VWAP to POC, VPOC has been done. Didn't get any higher. What's it going to take to migrate that POC down? See if we can get a short off here. That's irritating.
Order submitted. Order submitted.
So, try to catch this snap, which I missed a minute ago. Now, if we get down here within a tick again and don't get risk neutral, I'm going to get real irritated. And I'm very likely to get real irritated. I'm not sure what my problem is. Well, that was a developing value area low. It could well be an issue that I didn't take into consideration and might just prove to be my unwinding here. I missed the developing value area low sitting right here. They tested down to it. Now will we get through it again here and get the risk neutral? And we're sitting right at the IB low. Huh. I'm not sure what to do in this context, really. Do I move that initial target up to these lows? Do I think they're going to get one more tick? That's a hard call. But this is really irritating. There we go. Now it's risk neutral. You can see that the break even has moved there. I've moved that just under break even. So now the worst that can happen to me at this point is that I break even or scratch. However, if we get down to some of these lows and the micro down to the MC low, we'll doesn't look like they're gonna get that kind of play out of it, though. The IB low seems to be the touch. And we'll probably be scratched here. I'd like to see these guys just get running and get some legs on this thing. Generally, there's a scratch. Now, so that was a scratch trade. So we had a stop and a scratch. Scratch to the tick. Those always amaze me. And I'll point out something here. Had I not moved my stop under the break-even line, and rather just to it, it would not be stopped out. Now, that's amazing how much one tick, just like over here, one tick away from risk neutral leads to a stop. One tick lower or higher would still be in the trade. Doesn't mean it's going to go positive, but it's amazing to me how frequently that happens, actually. So we got through developing developing value area low, and the IB low seems to have held. Well, what are they going to do now? Go back up to that POC? That's not a trade. Well, 58.52, it's actually 4 points from the up there. But now is a real dicey spot for me. I wouldn't enter here. And now is when it'll sell off, right? Yeah, these are real suspect areas because basically we've been mean reversion and at a very close range all day. We're just in the lower distribution a teensy bit. Could easily go higher. And we're awfully close now to the developing value area low and the IB low, which saw what happened to that over here. So this is the FOMC Minutes. Came out at 1300 on 3 Jan 24. And I know what'll happen now. I'm going to be standing here talking. And this thing's going to blast off to China. Which is disappointing. But I'm too late to get in now. I suppose this exhaustion up here to 1, 31, 2, 1. You could call that exhaustion, but I think it's chop suey is what it is. Retail soup, probably. So I've taken a stop. Let's take it a scratch. Quite disappointing. Quite disappointing. Oh, I'm going to put a little music on here, get my water bottle, and think about this. I'm having a close look at what this is going to do. Looks like we're going to do the VWAP to VPOC trade. But that would have been 4 points. So that's a scale. There's a scale, I should say. Now what are they going to do? I'm going to try. God damn. Boy, this thing's irritating. Well, the developing value area high here again. Just above the POC. That shut everybody off, it looks like. I'm a little apprehensive to short this. This is talking about the IB low.
Order submitted.
See if we get up here to this target. I'm going to pull this first target just below the VPOC, MC VPOC.
Order submitted.
Which will affect my stop. There's risk neutral again. So now the break even is up here instead of down here, but that's okay. I'll still go to break even and see what we can get across this. See if we can get past the IB high. And perhaps not. What do we got above there? Value area low. If they got a squeeze on here, that could be epic. And it looks like it might be going to get epic here.
Order submitted.
Now I'm going to start crowding. For my stop. I'm going to bring my stop to the notch at the IB high. Right there.
Order submitted.
And see if I get taken out, which I did. So I probably crowded that too high. But did get, this would have gotten my original target. So I got pretty darn, see, that's what's screwing up my win rates and my average. Are these I don't know what's going to be captured there. Guess that's okay. So there we have that. And I think I'm probably back to about even. Now, isn't that pathetic? Two scratches, a stop, a scratch, and now just a little bit over even, I guess. But that's the joy of trading. And here it's going to probably now take off to my targets. So I crowded up too tight, obviously. Where would have been the next place to stop, bring the stop? The stop would have been, say, at this low volume below here. All this is swing low, I guess. And then likely higher ground. We'll see. We'll watch it and see. What is it going to do next? So this gives you a pretty clear indication of what has just happened here. We've taken out the IB low. It's a neutral day. The IB high again. And after all that trading, I'm, 5 or 6 ticks to the green. That's the part that hurts. But it beats a poke. And I'm going to need to fill my water bottle up here. That's pretty for sure. So I'll be right back. All right, so I got back, and what's happened? Well, it looks to me like we traded up there, would have just taken out this target, which I had moved up looking for higher ground, so just above the previous high. Thought we might get that because, there's a pile of stops living up there. It's got to be a whole bunch of them. That is this high based on this. So surprisingly, we didn't take out a lot more, actually. The IB high was previous high. So anyway, it is what it is. I managed it as I thought the right thing to do, and here we are. I went out to get water and forgot to bring my water bottle back, but that's, it's neither here nor there, I guess. Now I was trying to do something else, and I think I just screwed up in my Power BI reporting. And here we come back to the POC. Wow, what a beautiful short that would have been. Now, if I was a real clever boy, I would have shorted up here and be trading the mean reversion down. I'm just not convinced that in this age of FOMC, we can get such radical movements one way or the other. Probably makes me a little bit gun shy. I will have to say that. Makes me a little bit gun shy. And I'll publish this. I didn't do this right, so that's pretty annoying. I don't think there's anything I can do about it either. See if this works. The answer to that question was no. Okay, so POC test, and we're going to go north again now, or what are we going to do? So let's just see what we shall see here. I'll mute my mic because I'm going to be eating something, and I'm sure that would be unpleasant. All right. So looks like that micro composite VPOC is providing some point in the sand here for these guys. Now, I don't know whether we're going to take off over the top of this thing and head past the IB high and up. That's a big question. You can see here where we made a new high. Now we've got the zipper going in here. We're looking a little bit higher. But here's this MCVPOC and how we're just coming up to test at that. So so a big so. And so how does somebody imagine that they understand what this is going to be? And the answer to that question is you don't. The outcome of every trade is random. And that's the whole purpose for treating this like a business, having vetted setups that have a known, calculated, statistically proven edge, and then trading them every time they set up. Because the more instances of those trades you get, the more the possibility for the edge to manifest itself. And we are. That's how the money comes across the table. It's the same concept as a casino. Exactly. So what we're trying to be is the casino here, not the gamblers, but the house. If I could keep my mind straight, I'd be all set. And dealing with too many things here. Too many things. And I promise I won't sing. I listen to these each and every day. This will be an especially interesting one to go through with a stop, a scratch, and a profit, risk neutral trade. So there's 3 examples of what can happen in the life of a trader. Now, the stop was pretty darn disappointing because it was 1 tick from risk neutral. And this random flurries here make me nervous, to be honest about it. What's going on here? Yeah, so that would have been a lovely short outside in from the previous high area and the IB high, this area here. But I didn't do that. And under the circumstance of news, especially the FOMC, I'm pretty leery. Pretty leery. Having said that, then, it's a pretty classic mean reversion. Test a high, 97 stops, 2 stops, back up to 3 stops. Come down here and test back up under this little bit of liquidity at the IB high, and then break down. So what did you have? We had 69 to about 62, say, looking for this POC would have been the target. So that's, a reasonably good trade. Probably the better of the trades I've taken today. Would you have been nervous? Yeah. Been sweating bullets right here. Because you got, but the good part is you're scaled and risk neutral. I mean, assuming your timing was so wonderful that you got in here and, risk neutral in here. Now you're looking for what's it going to do? Is it going to scratch? What's going to happen? And then it breaks off again. So that is a pretty classic setup, and one I wish I would have participated in. as always the case when it's goes the way you were anticipating and would have been profitable. So now instead of looking at, 2 or 3 or say 10 handles of profits in those trades, I've got just a little pittance. And that's what ruins the profit factor or expectancy and that kind of thing. So that impacts your stats. That's why it's really important to be picky. But if it's too picky, you don't trade, and then what happens? So, here was a instance when we went up and touched this high, didn't get through it. Would have been a good asymmetrical trade. In other words, short here, and your stop can be a point above, essentially, and then see what you get. That's something I've got to get my head around. At this point, I would be real apprehensive to get involved. We're right at the POC, right at the mid. It's quite at the mid yet, but the mid is here. VWAP is down here, and the POC is right here. Got some liquidity living down here. So, yeah, be pretty apprehensive to get involved. Well, certainly not for a short out of here. What would I take about? We're back into the upper distribution now. See, we've got 2 pretty just clean distributions with the mid and the VWAP pretty much separating them. Here's the lower one where we spent a lot of time today. Now we ventured up into the upper one, and we seem to be holding up here. So what's going to happen now? What's going to happen down here? The NASDAQ pretty much doing the same thing, not quite as pronounced separate distributions, but you could call this a low volume node, I guess. So, yeah. What he said. Don't know. In other words, don't know. And that's you don't know about trading. That's why it's so important to have vetted trade setups with a statistically proven edge and then take them, because you don't know. Every trade is random. The outcome of every next trade is 50-50. Absolutely. It's either going to go up or down. And got to stop thinking about trading from a point of view of I know, I don't know, but I'm going to take as many instances of my setup, statistically proven positive expectancy setup as I can, and that way the money will come across the table. That is exactly a casino. They play 21, the same rules exactly every time, because they know that over a large statistical sample set of data, they will have a percentage edge, and that's money across the table. And, proof that works out, go have a look at Las Vegas. Pretty obvious who's got making more money. Well, that's that. And let's see now. Maybe nothing. Maybe nothing. What the hell was that now? Okay. Maybe nothing. Right now, it's very definitely not a place I would trade. This is diddling in the middle, right on top of the POC. And where the POC has been 2 times before. So it's pretty much a popular spot right there. And that's witnessed by, easily viewed over here. Here's the POC, right? Look at all the times we've been up there. Boom, 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 boom. Yeah. Tested and down, tested and down, tested and down. Oh. And there's no trade that says VPOC to VWAP. That's a misnomer. Yeah, didn't realize that. Now what's going to happen? Looks like we're falling out of bed hard here, headed for the IB low. And once again, I'm joining the party late, so I will not take this. And I have no idea what's going on with the Fed. Testing the VWAP from below. No, I don't have anything. I don't have any trade for that. What I have is a VWAP to POC, and that's probably 58 to 62 is 4 points, right? My initial feeling is short, but that's always my initial feeling. So I have to always counteract that. It takes a mental concentration or decision conscious decision for me to go long. And that's probably not good. But, it is what it is. There's a little absorption. You're going to take it down. My finger would love to go short, but that would be a breakout. And we've got the IB low down here below us at, six handles below. But look where we have turned around more than once. And that's pretty congested country when you get back in here and look at it, you see? We're right back down where we were. We ventured up a little bit. We're down here. The only draw would possibly be that we're going to hit into this volume below. But this microstructure, we're right at the microstructure VPOC. Kind of an over-under. What's the motivation for these guys to get down here? Don't know. And this is not an asymmetrical spot to be taken as short because you got the mid and the POC above you. And developing value area low right down here. And the IB low, which, recent memory will suggest because I just got taken by a tick down there. That's not a good spot for me to get involved. And here we are down at the developing value area low, the IB low just below it. And a whole lot of liquidity down here. That's a breakout trade. I guess I will forever be disappointed that I didn't take this test, but that's not any kind of a vetted anything that I'm aware of. I'm sure lots of people will say so. The value area low might be a viable spot, but the IB low is just below that. And there's a whole lot of, where the hell did that go? Okay. There's a whole lot of liquidity and it's moved up to 49. So and we're at 1410 here. So another 50 minutes in the market. Yesterday, the closing swing trade was epic without screwing up my book map. Let me see if I can. So here we go down and bam, the closing swing trade all the way back across. Pretty epic. Oh, finally, the VPOC has migrated back down where they were before. So there's been a whole lot of nothing going on here. Now, the last time they were down here, it was for about an hour, not quite. I can show you what I mean by that. This is what's pretty handy about IRT. This yellow line is a developing value or VPOC. Okay, so here we were, back up here, straight across, and where are we now? Oh, we're right backward here. So here you go. Actually, This could be considered a VPOC migration trade. And 56, 53 be scaled right now. Looking for lower. And that's not an unrealistic. That's not an unrealistic target. And we got down to 4 points. So he's scaled and still sitting on a risk neutral. Now, are you going to get the extension down here? I don't know. That's a real open question. I'd like to. Where'd she go? So, no, we tested up there. Almost tested up to it. 55 half to 52 half. Well, there's 3 points. Could have been scaled. Looking for lower. So let's imagine that you were real good at execution. You're in at 55. And you got to get down to 52 before you've got a scale on. Or you were real good over here and you're now scaled from here. That's, that's the whole idea. That's the whole idea. And I am none of those things. I was short, missed my scale by 1 tick, was taken out for a stop. Went long, got risk neutral, scratched. Went long, got risk neutral, and got a trailing stop just below my target at a low volume area adjacent to the IB high. That's where it stands for the day. I'll go back to the stream, and here we go now. Now the scale would be working out, and I would be considering myself a genius. See if we're going to head for that lower ground, which is entirely possible in this market. That because just down there a little ways is the bottom of this micro composite, which will have a whole lot of stops in it, I would assume. And there's a lot of liquidity sitting up down here. There's 1,000. 715. 700 and change right here. It's a lot of contracts. 750 here. 720 here. That's a lot of contracts, and they're not pulling out of the way. These guys are dug in. They started to trade out a little bit, and they didn't pull. And that looks like that low liquidity at 51 held. Held for the time being, anyway. And they are not planning to get out of the way. How long has that been in there? That went in there at just after 3, after 1, a little before 2. So what are they going to do? They're going to test that liquidity again. Those guys held pretty rigidly the last time down there, as is obvious right here and right here. That's some selling pressure into that, quite a bit, actually. And they absorbed it and kept going and held their ground. Now you could say that we sort of have a mean reversion set up for exhaustion. We've got 124 out here. We've got 2 out over here and 11 out over here when we came back down to it. So there would be a reasonable idea that we're going to rotate back up. The problem is, here's the mean. It's rotated or migrated down to 56. So by definition, that's where a mean reversion is going to go, to the mean. That's there. I mean, that's the volume point of control, which is the most traded spot. I guess the mean by actual definition is the mid up here. But typically when I talk about that, the mean reversion, I'm talking about POC is here. That's kind of the mean of this distribution. Here we go. They traded it out. There we go. They lifted off because they didn't trade it out. 700 contracts and only 231 stops went off here. So, and 500 iceberg. So there you go. So there's a 500 buy iceberg. And now we're going to make lower ground. So this little rotational business up here was the ideal idea, the idea, I guess, for that short. What will happen now into the close? Another story. But I wish I was sitting on a short because I'm still thinking they're going to go down here and look at what's going on below this MC low. But you never know. Now, what someone will say is that the VPOC migration trade was correct. So here it is, tested up. You shorted right here. You would not have been taken out through any of these rotations, and you'd still be sitting on a short of 6 handles right now. So there you go. And that's one of the instances where having a good data set that can be filtered and analyzed is so important. How many times have I taken a VPOC migration trade in the direction of overall market, I suppose, the context? Has it paid out? How many times has it not? That's what it is. And if it's paid out and has a positive expectancy, then you take the damn thing every time. That is the business of trading. And as I understand it and what it is. And here we're going to come down and test this again now. Developing value area low has been pulled down to here. It's now below the IB low. If we remember, it was just up in here above some time ago. Again, these levels are pushed directly from my IRT. And if you want to see that, so this is the volume profile that's running that. This is where the colors change. Value is blue, gray is outside of value, so the value area low is this blue line. And, POC, mid, VWAP, all that same stuff. And that's where the levels come from. So 4749 or 4750, I guess it is the value area low, developing value area low, and that's right there, pushed from, and that's as pushed from IRT right there. Yeah, they're going to trade through all that liquidity short. And I'm going to be standing here pissed with the possibility of, FOMO trade or a breakout trade or something like that trying to seep into my psyche. I would like to be sitting on a substantial profit, and I'm not. I'm luckily probably just broken even on the day. which is, of course, better than not breaking even because it's a preservation of your account and capital as the first goal and objective of a trader. If you can't trade tomorrow, you're not in business anymore. So the first objective is or responsibility is to preserve your account and be able to trade tomorrow. That's what stops are for. Stops are for to preserve your account. That's a good thing. Nobody likes taking them, but when you start not putting stops in or disrespecting them or moving them out, you're committing trader suicide. Unless you're a pencil neck, one of the influencer guy or something, trades by so and so that are taking L's and doing game talk and dropping a bag and all that, all that crap. Boy, there's some really random people out there saying trading some random strategies, and you see them, take $4,000 or $5,000 loss in a day. I always wonder how they're doing that. I'm assuming it's sim. I think even $150,000 account at TopStep has a $3,000 loss limit for a day, I believe. So, if they're doing a funded thing or something. And here we go, back to that POC, baby. Or the famous or that everybody loves. We're going to come pretty close to testing this level up here. And can we go back down at it? We're getting 14:31 here, time-wise. So 29 minutes till the close. As far as I'm concerned, it closes at 3. The curb trades goes to 3:15, 3:10. There should normally be around 14:40 to 14:50. Liquidity will just fill up on either side of price. And that's when a big move can start. Market on close orders. People that have been in a position all day are squaring up. So we traded right down to the developing value area low, and we're coming back to the VPOC. So in hindsight, or if I switch to my RM trading at rear view mirror, here is a test down. Didn't get through this liquidity. We are, what are we? 1, 2, 3, 4, 5, 6. Wow, that's still 6 points. Or no, I'm sorry. Jesus, what am I doing here? It's 1, 2, 3, 4 points. So just out of the scale range to take an asymmetrical trade north here. In other words, a long, which would have paid out in spades. 7 points up with no heat. I just have a hard time doing that. If I'm thinking short and the whole day's been looking short to me, then to pick a trade like that with all that liquidity right there, I'm not cavalier enough to just think, well, what the hell, I took a stop. So that's what I did. That bothers me still. But this bothers me. I'm not sure which bothers me more. I think taking a stop bothers me more than missing profit. That probably speaks volume psychologically for me. Yeah, I got to think about that. Actually, I had not done so, but that's definitely an interesting insight. And here we are, coming up to 40 now. Again, to avoid confusion, the bright yellow is the current session. which in this case is the RTH, VPOC, and the darker POC, or yellow, is the full session, which started at 1700 last night. Yeah, I got to get my head around that. It was asymmetrical, just taking trades off the bottom. The problem with those kind of trades for me psychologically are it's like taking a trade off the POC. It's for years I've, worked and thought and read and been told, picking bottoms is for fools. Picking bottoms and tops get your fingers sticky. All those little euphemisms. Don't diddle in the middle, blah, blah, blah. And so for me, taking this asymmetrical trade is picking a bottom, isn't it? What else could it possibly be? But that's the problem with a mean reversion trade is where's the mean? It's mean because you got to pick the outside in, right? So it's a mean trade because you're picking the outside in to get that mean reversion trade off. And that's what makes them difficult. That's why I try to always look at mean reversion trades in the direction of context, which in my opinion has been short, but that could just be because I like trading shorts. And if you look at the day, in reality, it's been rotational from the get-go. This last little bit here, short down from whenever the hell that was, 1 to 2 o'clock-ish. Okay. But really, pretty much all day, this thing has been rotational. So mean reversion from any of these sides would have been a viable trade. And somebody will say, well, this there's exhaustion testing up to the VPOC, and we're coming back off again, heading for lower. And that's true. Right now, there's 4 points off, 3.5. So it's a mean reversion scale again. But as I was just saying, I just have a real fundamental, I guess it's not fundamental. I guess it's a developed aversion, intentionally developed aversion to trading around the POC. That was always considered retail fodder, and fool's game was trading the POC. So, and of course, humans are so good at spotting targets, right? So I was just saying, okay, here we tested the POC. We came up and tested a 2, tested here and sold off. Yeah, well, what did we do over here? We're above. We came back and tested the POC. We came up here, came back and tested POC. And what did we do? Oh, now we are selling off, but we didn't go up, right? So it could have gone either direction. And it didn't. Or hasn't so far. It hasn't really gone too far in any direction. It went down about 3 points or 4. But not really a substantial movement. Let's see what you got to say. Okay, so quickly, a recap here. We're at 1440. That liquidity jam will usually start around 1450. Just a quick recap here. I don't know whether rolling it back will work. Well, here was the first trade. That didn't work like I had it planned. I don't monkey with this thing too much. Yeah. So here was the the first trade, I think. No, I'm sorry. There's the 1 o'clock hour. This is when the news started. This was the first entry. Came down within one tick. There's the entry. Came within one tick of this risk neutral scale. If you can see that, there you go. That's how to do it. Within one tick of the risk neutral scale. So I was stupid for not having my bringing my target up just below that area and that liquidity. I will blame that on myself. And then it went back to take me out in a stop, which I, of course, don't move my stops and I take them. A few minutes later, similar situation. We tested high. I was late to the party. It's new at the zoo. Tested the mid, the VWAP. Looked like we were heading lower. I got a short in late from the VWAP trade, a VWAP test. Sat on it. Got the scale, risk neutral. Brought my stop just under the break-even line for the risk neutral functionality. And now here's one that's kind of really irritating. Got taken out by the tick. And had I left the stop right at break-even, I would have still been in this trade. So that's a scratch. So it's a loss and a scratch. However, it went on to take it out officially, so that's not a problem. Sometime later. So sometime later, again, late for confirmation. We came up to the POC. We came back and tested. We broke out above this POC, heading for what I thought was going to be the MCV POC and points north, the IB high. And I got long. I got a scale off. I brought my stop just my first target lower, just under the MC VPOC, thinking that might, and the high volume node, thinking that might be a good idea. I was now risk neutral. I brought my stop up to the just over break even, and then price started to stall out around the IB high. And looking at the this wasn't up here yet. Price had only been to here. So I started to trail up tight, and I brought it up to the IB low volume area where I was hit. Trailing stop was hit, and actually, had I left the target alone, it would have been taken out right here. I thought I would get it a tick or two above the at that point the previous high, and a little closer to VWAP. So anyway, it's a stop, a scratch, and a risk neutral trade to target and trailing stop just below T2. And now where are we? Well, we've tested the POC again. Boom, boom. And now we're going to trade back down and take another run at this liquidity and lower ground from the looks of it. That's the value area low. I couldn't take this trade. It would be a breakout. You can see where we've tested this liquidity several times. My guess is when that volume hits in, it will, well, I don't know, actually. I don't know what my guess is. Yesterday, nearly the same situation happened, and about 250, it took off like a rocket, went straight up. So I'll have my little finger on my keyboard, which is how I initiate trades, my keyboard, and then I manipulate the stops and the targets as necessary with a mouse. I was always getting the mouse on the. You need to have the mouse on one side or the other of price, and either right click or left click or center click. And I would get confused in the heat of the moment, probably because I just didn't work on it enough. But I've traded with a keyboard for a long time, so for me to have a keyboard set up and execute that way is simpler and less confusing. I suppose it's the old dog, new trick story. Anyway. So, same old, I guess. But from a risk neutral and a trading point of view, it's the full menu. It's a stop, a scratch, and a risk neutral trade. So there we are. And I would imagine that I'm probably just about at break even, or maybe a little bit above. Not much, however, because of that second trade was condensed due to the location of the MCVPOC. And of course, if you lower or make your first target closer to your entry, then you've got to bring up your stop to have the risk neutral math work. In other words, the first target has got to be equal to the stops so that the second contract is riding free. And that's what I always do. Oh, look at there. They've chewed through that without a lot of fanfare. Had a little bit of a buy iceberg hit in there. And we're getting to 48. So is it going to close in and take off? I'd like to just jump on a fast one for, a fast one. A quickie. I like a quickie right now. And the problem with a big boom up like happened the other day is how to recognize it early and get on it before you're chasing it or late to the party and then standing there holding the bag. And of course, nothing could happen. We're coming up to 50, and that's usually when the liquidity loads. I don't know, maybe they would. I was trying to think of an instance where I've seen them run it down into the close. Generally, you would imagine that they would be taking profit. So all those shorts would be buying, and that would be giving you up movement, but don't know. The joy of trading. We don't know. I know that I don't know. I think that's one of a Tomism. Tom B from the Traders Lab, great guy. I think one of the true professional traders and not scam artists on the internet, on YouTube for sure. And I guess by extension, Discord. the book map Traders Lab, and the guy's Tom B. Here we go. You don't have to be a Bookmap subscriber. Go to Bookmap. There's a link on this stream down there. Just get you an invitation, sign up, join their Discord, and then go to there. It's real interesting. And he's got some great things to say. He streams once a day from 10:30 to 12. Very, very, very worth listening to. Well, shows you what I know about. And here we go to that MC low. Shows you what I know about don't go down during the end of the close. And the liquidity didn't jam in, which is pretty funny. I actually thought that there would be a load of shorts stops below that MC low. That's pretty surprising to me. Pretty surprising to me. Well, so pretty much everything I was expecting didn't happen. And that's trading. The magic of trading. Okay. I am a little bit leery to hit into a long at this point. I had to bet reasonable money that there was sufficient, considerable stops living below this low. Here, I could take a quick journey to the IRT and show you. You see, this is my old original micro composite, and as far as I'm concerned, as long as price is overlapping, this is still it. The TLAP guys and Tom were drawing theirs up here, and that made sense to me, so I did. Now you can see that this is the low of all of these trading days and all this action, and here we are today. So I fully expected that when we got below there, there'd be a lot of stops down there. And I still think so. So we'll see what happens now that they hit into it again. And I'll be forever pissed that I didn't take the pullback here, the short to pullback. It's pretty funny to me, though, that there's not a lot of stops living down there. I mean, there's that big pile of liquidity down here at 70 and at 40 to 38. But I'm surprised. And there they go. So it shows you what I get for not taking VPOC migration. That's been a beautiful thing. Coming up to 15 points without any heat. And I want to stress that, without any heat. If you shorted it here, you shorted it here. At the test, which would have been probably the more valid. No heat whatsoever, straight down in 10 minutes. Pretty good money. Yeah. Well, I'd like to see him hit that. I'd like to see him hit the panic button. Have a bunch of people start buying and just grab a fast one. or handful of points just to get it above the break-even number there. This might have been what I was looking for and didn't get it. Up to value area low. If you want to look at this in terms of candlesticks, what happened here? Value area low, low, lower high, lower low. Now what's going to happen? Don't know. Value area low is looking pretty impressive, and there's a you look left, there's a buttload of liquidity was out there in the not too distant past. Pretty crazy that all the liquidity, typically on a normal day, I don't know if I could show a recording of that somehow or another. This entire area would just be loaded up and look like this on either side of price. And that's strange to me that that's not happening today. Hey, I stuck to my guns. My trades weren't particularly well chosen, and I didn't take some setups like this VPOC migration in the direction of trade, in the direction of the context, and I didn't take it. So that is disappointing, and that would have been, 15 points. That's pretty good, even if you say it fast. And I'll watch this into the close, another 3 minutes here. That developing value area low seems to be, I see. Sure would have thought there'd be some boys hitting the plunger to take some profit. I would have thought. Here come the algos starting to poke around here. See this algo flashing right here? There was some conspiracy theory once upon a time that said that's how they were talking to each other. Traders, these high frequency guys or hedge or whatever they are. Higher time frame, deep pocket guys would talk to each other like that, like, 3 flashes at such a price or at a color is, some sort of signal like Morse code or whatever else. And I have absolutely no clue if any of that's the truth, but yeah, some people do believe that for sure. I was so hoping that we would get a big pop like yesterday, which I wasn't able to take advantage of doing something else. Seems like I'm always busy doing something else when the good stuff happens. That's not the best. And here they come. Now they're starting to load the boat on the other side. Now they're starting to load that boat. Developing value area high has just shifted down. Prices sticking at that old DVH. Developing value area low. I'm sorry, I don't know what to. Guess I'm tired. And liquidity got right on top of that. No, you won't be going up here yet. Anyway. And we're going to be done with this here in a second. Look at him hold that down. Crazy, huh? Now they lift off, and who knows what they're going to do with it now. Kill it here, I guess. Yeah, so there's that. Kind of went out with a whimper, kind of like my trading today. But a stop, a scale, a stop, a scratch, and a risk neutral trade. So that's okay. That's okay. I preserved my capital, and I will be trading tomorrow. And that's the ultimate goal. That's why risk neutral is, I find, such a fantastic theory, trades, I don't know, trade strategy, whatever you want to call it. Because first of all, it gets you into a situation where you just can't imagine the stress that's taken off psychologically when that scale hits, because all of a sudden the worst that can happen is a scratch. So your account's protected, and all you've got ahead of you, I mean, the only other option ahead of you is positive. So, and if you want to pull that second stop up past break even a little bit to cover your commissions, that's usually what I do, a tick or two. However, to point out, as I just did a few minutes ago, I got stopped by that one tick. It turned, as it turns out, the trade did go the other way, so it just prolonged the agony. But that's, that can happen. And I missed that on the first stop. Price came down, and the old saying is, "Don't be a dick for a tick." I should have hit that, or been aware of it, but I left those stops as they were set up and targets, and it missed that scaled first target by one tick. Would have changed the whole complexity of the day. I would have had two scratches and a winner. So, yeah. And I don't trade very many trades in a day. Usually I'm busy doing other stuff too, like today. I had a couple of presentations to make in the morning, which is not very convenient for me. When we lived in Kuala Lumpur for 11 or 12 years. We just moved to North America Central Standard Time 2 years ago. But it was perfect there because the regular trading session opened at 21:30 at night. So I had unfettered, uninterrupted focus, and everything of the day was long gone. And, it was really, I really enjoyed that. And it was great. I miss it. I miss it a lot. A million other reasons why I miss Asia and Kuala Lumpur, but from a trading work point of view, and I was thinking about that this would be a good place to work and trade from, and it probably will be once we're a little more used to this scenario over here, and I am able to get my other, like these two presentations I had to be involved in today. Start figuring out how to reschedule that stuff so it doesn't, just take a block of time out of for trading. First 2 hours of the morning, don't do any. Nobody bothers me. I don't talk to anybody till 10, for example. Something like that. I'll work that out. So I'm going to not take any trades now, of course. And to recap, a short trade, missing the risk neutral by a tick, a scratch, which went risk neutral and then doubled back to the stop and the scratch, and then a risk neutral trade long to this to the scale, and then not quite to the original target, but I had moved it up thinking we were going to get some legs, and I was bringing up the trailing stop as a form of trade management. So that trailing stop is where that is the exit will be. That will be the designated exit for that trade. I'll now go through the stream, make sure everything's okay, set up I always forget to look at the time in markers for trades so that I can do the timestamps to make it a little bit easier. Just, I'm not a YouTube guy. I just do all of this crap so that I can have my journal. Like, it's going to be so interesting to me to replay this tonight and hear what and see what I was thinking at the time of those trades. That's phenomenal, considering how it used to be, Wow. I think with that, I'm not expecting anything brilliant to happen in the meantime. I will wind the stream down now, and I think I'm glad that I logged on for this second stream of the day, based around because I was anticipating some action out of the FOMC minutes, and there was some, of course, and I'm sure that some people got some fantastic profits, and good to them. And I'll be here tomorrow because I have lived to trade another day. And it's not RMT. This is not an RMT trade day. I don't trade in the rear view mirror. That's really great. I got to try to figure out a way to incorporate that into something. Maybe another YouTube channel that's just nothing but rear view mirror, just replays and, having stuff, knowing where the market, Jesus, where the market's going, right? Like I could do a replay of this last hour and on this, and, call this test of the, this VPOC shift. And this test right here is, this is what I'm going to do. And here, we've tested back. We have exhaustion, and I'm entering here and look like a complete wizard, right? That's so lame. So many people do that. I've actually even heard of some of these YouTube people that know that their client, that have a lot of followers, and they'll pick a low float. This is particularly at stocks. They'll take a real low float stock, and then they take advantage of the YouTube delay. So they will say, I'm going long rubber dog shit at this price. They're already in the trade. By the time that delay comes out, all of their users pile into that trade. And as the users are piling in, they're taking profit and selling to them. What a scam, huh? Taking advantage of the internet, of the lag time on YouTube from when they announce it or call the trade. And then as their users start piling in, they're selling out to the users, or front running them, in other words, which is exactly what happens on all of these, trade for free, ridiculous things that are getting all the trade for free from your phone and all this crap. And they're selling all the order flow tonight and Citadel. And those guys are just front running you. They're front running all these kids that think they're getting something for nothing. And I guess, caveat emptor, let the buyer beware. So I will shut it off now. I hope that this stream eventually helps people and is of some benefit. If it is, I hope that we start getting some subscribers and likes just to know that it's working. But it's the ultimate goal or reason for the stream is my trading journal. So 3 Jan 24, 1510. Signing off. Have a great night. See you tomorrow.